Well, hello everybody, and my name is Susan Hayes-Culleton. I am delighted to be your host here today for the ESG and Tech Show right here at VectorVest, live on YouTube. Well, first and foremost, it's been a really interesting week. We have just a couple of hours ago had the release of the CPI data, the data all around inflation coming from the US, and we're going to have a chat about that today. We are also seeing yet again another game of two halves when it comes to looking at the markets between the US and Europe. Right now we are in a confirmed up call in Europe, whereas we're in a confirmed down in the US. So we'll also be talking about that and the different actions that you can take as well. In addition, of course, usually, as we have seen over the past while from an ESG point of view, Europe does seem to be leading the way. But the stock that I'm going to talk to you about today has released its first ever sustainability report. So we're going to talk about that and just how we can truly think about how to factor ESG into a portfolio in a way that seems a little bit less obvious. In addition, of course, we are into a big earnings week this week. We have got JP Morgan, we have got Citi, and a range of others, particularly later on Friday. So a lot of us are keeping an eye out for what's going to come there, as well as an action-packed week when it comes to a range of different earnings reports that we have been seeing. And of course, there is always the conversations that are happening right around the markets as well, around whether it's recession or whether the market is factoring in more interest rate cuts and where we're at with inflation and all of that. So if you are interested in all of the above, you are indeed in the right place, right here at the ESG and Tech Show with me, Susan Hayes-Culleton. So let's get started by first of all asking one of my favorite questions, which is where are people tuning in from? So please do let me know where you're joining me from. I am here live at the moment in my office in Dublin, in Ireland. And I know there is never a show that passes when somebody doesn't comment on, oh, I love your accent, or hearing about the fact that, yes, indeed, VectorVest is a real live Irish person with a real live Irish accent. So yes, I am here in Dublin, in Ireland at the moment. And so I have to say, back in the air again a little bit. We were in Belgium quite recently with VectorVest. We were exhibiting at the VFB, the Federation of Investors show in Ghent in Belgium a little while ago. I was in London last week talking to people there all around inflation, particularly in the UK, how to navigate that from an investment point of view. And this week, would you believe I am off to Frankfurt in Germany on Friday as we're meeting with a new partner out there. So lots going on from a geographical point of view where I am. But I can see loads and loads of you have started to respond to me. So let's just take a look and see where you're coming from. Andrew is joining us from San Jose in California. Orlando is joining us from Greensboro in North Carolina. Charlene is with us from Alaska. Harry is with us. Good morning from Grand Junction, Colorado. Dirk, hello. You're very welcome, Dirk. You are joining us from Belgium. Indeed, I'm sure you know exactly, if you weren't actually at the show a couple of weeks ago in Ghent that we were at. Joe is joining us from Daytona Beach. Lorna, another person joining us from, San Diego is distinct to San Jose. A little bit of a difference there in between the two. Francisco is joining us from Chicago, fabulous part of the world. Lifestyle Coach joining us from Texas. James joining us from Los Angeles. SI is joining us from Costa Rica. David joining us from Perth in Australia. Who else have we got here? We've got Six String joining us from Atlanta, Georgia. Sergio from San Jose. Now I knew there was somebody else joining us from San Jose. You're very welcome, Sergio. Conrad is in Florida. T. Cans is in Toronto. Joanne is joining us from Vegas. Maria is in New York. Astashi is joining us from Decatur in, I think that is Alaska. Charu is joining us from Calgary. Jacqueline is in Minnesota. Joey is joining us from Huntersville, North Carolina. You're very welcome, Joey. We have Kim who's joining us from West Virginia. Michael from Denver. John from Bay City, Oregon. Martin from Port St. Lucie in FLA, I think that's Florida. Alex joining us high from Houston, and Jim is joining us from Fort Lauderdale. Well, wherever you're joining us from, please do tell us there in the chat. It's always something that I love to see what part of the world. We have quite the audience from right across the US today. In the last show, we had lots of people from Canada, various different parts of the world, but particularly in Canada. So great to see that we've got a super audience from all over the US today. So indeed, please do join us and settle in for the next while I'm going to take you on a whistle-stop tour of what's going on around the world. Kevin, you're very welcome from Baton Rouge. Been there. And actually, they're coming at me so fast today that I couldn't tell you where I've been and where I've not. But Baton Rouge certainly is one of them where I have been. Okay, here's the way we're going to work today. First of all, I'm going to take you through market timing. And then after that, I'm going to particularly talk you through the inflation figures that came out today. The reason I'm going to do that is particularly now that I know we have a range of people here from across the US. Of course, it's natural that you're going to be interested in that particular area. But of course, as they say, if the US sneezes, the rest of us catch a cold. So from the point of view of how the news that came out today and how that may ricochet across the world, we'll also have a chat about that. I do want to point out as well the differentials in particularly, for example, inflation in the UK, what the IMF said yesterday about Europe. And I'm just going to pretty much take the news that came out today about inflation and really understand it from around the world point of view. Now, then from there, we are going to go on and take a look at one particular stock that I want to focus in on today. And the reason I'm focusing in on this stock today, it's a tech stock. And I did say that today we were going to talk about what is driving earnings. And I want to give you a holistic understanding of that. So one particular stock that I'm going to take you through today, I'm going to look at it from the point of view of its earnings call. I listened to it live last night as it was coming out, and I'll talk you through it. And also just to distinguish the difference between the top line figures, the figures that people are talking about in the market today. But actually, if you look under the hood, as they say, just want to take you through a couple of elements there. And of course, this is the ESG and Tech show. So I'm also going to give you a little tour of its sustainability report, because I think there is an angle there that is often missed when we talk about ESG that came up a lot in the earnings call last night. So I want to refer you to that as well. Now, of course, I'm only delighted to answer any questions that you have. Please do pop them into the chat as we go along. I'm only really and truly delighted to hear from you. If you've got any comments that you would like to share with us, please do pop them in there as well. And you know what's even nicer is when you talk to each other. When you talk to each other as well, please do feel free to have a chat among yourselves and join in as we go along. Of course, if you are watching this episode and it is not live today, please do put your comments in the comment section, and we always love to see that too here at VectorVest, and we respond to you. Now, I see Charlene has said, wow, a lot of people. I wonder if I'm the only one from Alaska. Well, Charlene, I'm going to put that out there and ask anybody else who's joining us from Alaska to please do let us know if you are. Tom is joining us from New York. Cyril is joining us from Atlanta, and Francisco is talking about the dollar breaking out. Well, you see, that's why the inflation report today is so important. Let's take a look at that, Francisco, indeed. Okay, like I say, I'm going to start off here and let's look at market timing first. We are, as I was mentioning to you earlier, it feels like in a game of two halves. As somebody that is based in Ireland, and Ireland is in the European Union, and specifically it is in the Eurozone, as a result of that, I'm always watching what's going on in the European market. It is the market that I invest in. It is the currency that I spend my money in. But I am also somebody that is very much focused as well on the US market. The last stock I bought was in the US. The second last stock I bought was in Europe, specifically in Milan. I told you about that one in the Savvy Investor show that we've had most recently. And the one before that I bought was actually listed in the UK, but exposed to another region. So I tend to be an investor that is exposed or interested in investing around the world, and therefore I am interested in how things are different and how people look at things differently. Now, Tikan says, why should we even care about ESG when you can't believe the process? Well, Ticans, I'm going to look at ESG differently today than the typical and traditional way that it is being looked at. So let's just take a look at the angle that I want to approach it at today, and then let's have a chat about it. Let's see what you think after that. Thank you indeed to VectorVest, who is saying hit that like button for Susan. Please do hit that like button. Of course, the more people that actually like this episode, then the easier it is for others to find it as we go along. All right, so I'm going to start off up here. This is the US market. And hello, Fred, who's just joined us from Dallas in Texas. You're very welcome. So here, if we just take a look at what's going on in the US market at the moment. First of all, I'm going to unlock this over here. And I'm going to bring this right over here into the center. I'm always conscious that for anybody who is joining us on a mobile device, that might be a little bit difficult to look at, but let me just explain it to you very briefly. First of all, even if you can't read the little small numbers that are appearing there on your screen, you can certainly see the color, unless of course there's a visual impairment. And even then I will explain what is going on, and that is that it is all yellow. Now yellow, when we see yellow on a color guard, this means that there is a very significant disagreement in the market about whether it's going to rise or whether it is going to fall. So is the environment in the market where buyers are winning or where sellers are winning? Oh, when you see a load of yellow, it means they can't decide. It means one of two things. Either the trend is weakening or else the trend is reversing, one or the other. Now, it's even hard to pick out what the trend really is because, first of all, for the latter end of March, we could see probably more green lights, and there was more of a sign there of a rising market. Now, think about what was happening at the time. Think about this. Well, what was happening at the time was that the market was rebounding after that tremor that we felt arising from Silicon Valley Bank, Credit Suisse. Then there was a question, particularly when the banking crisis was coming over my part of the world, namely what was happening with Credit Suisse. And then there was a question one Friday about Deutsche Bank. Then, of course, the market was turning around. And then what started to happen was 2 weeks ago, I was on Glenn's show, first of all, on the mid-afternoon update. And then I had my own Savvy Investor show after that. And in that one day, in that one single day, what had happened was the bond market had totally repriced itself. It had totally repriced itself, and it said, we are now factoring in rate cuts by the end of the year, not rate hikes. Now, again, we'll talk about that based on the news that has just come out today. So after that, then, as you can see, then we've got some red that has been factored in there now. There seems to be, based on the inversion, and the inversion in the bond curve has been there for a while anyway, the bond yield curve. But in particular, there was more and more factoring in of potential issues around uncertainty, recession, etc. And as you can see, since then, it's continued to be yellow. But apart from what we've seen on a day-to-day basis, which is what the colour guard looks at, on the other hand then, just here, there, yep, just what you can see right there is there has been a serious consistency there of a confirmed down call. From a longer term perspective, or from a more conservative perspective, the US market is in a confirmed down call. And let me just explain briefly to anybody who's not familiar with VectorVest how a confirmed down call happens. It happens when, number one, the buy-sell ratio is below 1. The buy-sell ratio is the number of buy recommendations in the US database from a VectorVest point of view relative to sells. And right now the BSR, as I'm looking at it right here for you, is 0.3. 0.3 means that for every 30 buy recommendations, there are 100 sell recommendations. And again, that'll give you that sense of sentiment. This is always our canary in the mine, is that when we see that going below 0.2, we would say the market is oversold. That's not to say that it's a buying opportunity. Buying opportunity comes when buying opportunities come. And that can be from a green light, for example, or confirmed up call, the MTI going over 1, and other market timing indicators. There's a difference between the market being oversold and people wanting to actually find a buying opportunity. So when I see now the buy-sell ratio has been rising, and it has been rising steadily since, well, on the 24th of May, it was at 0.16, and that would be an area we would consider to be oversold. But it did go up as far as 0.33 on the 3rd of April. And it fell after that and has been rising since. So it'll just be interesting to see what's happening there. The other one that I'm going to look at with you over here, so let me just find my mouse, here we are, is the MTI. The MTI is the market timing indicator, and this too, very, very simple indicator, and this one should be much easier to see because I can increase it and I don't want to get in the way. Hello Randall, you are very welcome, also joining us from Texas. You're very welcome indeed. So here, when you can see here the MTI, this is the market timing indicator. Above one is favourable, below one is unfavourable. Right now, the MTI is at 0.87 and it's rising. Now, it went up as far, excuse me, it went up as far as 0.94 again on the 3rd of April, at the same time that the BSR peaked in recent times and fell back down again. But so far, based on what I'm looking at right now, and as I mentioned, today we are live, based on what I'm seeing right now, the market seems to have responded well to that inflation report, and we seem to be on a rising streak, but it will take until the MTI goes over 1 for that indicator to have turned favourable. Okay, so that's where we stand. That's where we stand from an MTI point of view and from a market timing point of view. But if you just come on a journey with me here very quickly and come over here to Europe, I could show you a very different scenario. First of all, let me just pull up the colours here for you. An awful lot more green. There's a lot more green in Europe, a lot more green. In general, we're looking at a much more encouraging trend in Europe. There is indeed some yellow, but there is a lot more green than what you're seeing in the US. And also on the 31st of March, we saw the confirmed call up being issued, and the MTI is over 1, has been over 1 since the 29th of March, and appears to be rising. So our data in Europe is end of day. Our data in the US is real time. So the market in the Europe is about to close in 14 more minutes. As I say, we are live. So we will be seeing the update of that end of day data pretty soon. So very different scenario there. Like I say, the last stock that I bought is in the US. The stock before that I bought is in Europe, and up. And I'm happy about that because, of course, when we do look at the way in which the market is at the moment, it is trickier to find the stocks that are rising. And all I need to do is to explain to you, of course, that the buy-sell ratio being at 0.3 in the US is just showing you the level of sentiment and where things are at. So I'm now going to pop on over and I'm going to start analysing and sharing with you the inflation results that came out today from a CPI point of view. Before I do that, can I just check in with you all? Where are you at in terms of your own portfolio? Are you in the market? Are you in a specific market? Are you finding it harder to find the opportunities within your market? Are you in the US? Are you in Europe? So this time I'm not asking where you're based, but where are you focusing either your investments or where are you focusing your interest? What is catching your eye at the moment? So in my case, I am certainly very happy at the moment with my positions in Europe. US is trickier, that is for sure. It is trickier. The trend of the market is more so upwards, but it is trickier. And then the emerging markets are tougher again. And look, I could go on and on, but I'm just going to stop there. So Chris says around about 40% invested looking to commodities at the moment. Interesting, Chris. Okay, yeah, very interesting point there. Francisco said sell puts. Well, Francisco, you will know that you were talking to the right woman when it comes to that. In the last Savvy Investors show, I analysed Carnival actually. They had their earnings results. The earnings results were looking pretty positive. But I wasn't sure if I was bullish or not. So instead what I did was that I looked at an out of the money put with lots of volatility. And I was looking at the position that you could take as a result of that. So would you mind actually, Joey, would you mind, could you pop the link for the last Savvy Investors at VectorVest show into the chat, please? Just in case anybody might like to go and look at that as a specific case in point. Fred says averaging into individual stocks, you're targeting 40% of equity. Interesting. Okay, averaging into them. I certainly would have a lower investment size as well per position at the moment because of that. It's harder if you're investing in the US, you're swimming against a tide necessarily, and of course you have to manage that. Jim says Buffett likes Japan. Okay, interesting. Jim, I invested in Japan years ago. I'm not there now, but I invested in Japan years ago through an ETF. Now, it's not a market that I would know stocks specific wise enough about in order to be taking individual positions in there. But certainly, and I used a currency hedged ETF as well to do that. And I did okay. Sue says only one US stock and patiently watching, waiting. Well, Sue, you know, that is the name of the game. Making a decision to not make a decision is a decision when it comes to the market. I just came up with that myself, actually. It sounds like a bit of a tongue twister. I didn't even practice that one. Okay, now at this point, what I'm going to do is I'm going to pop on over here and let me take you through. This piece I'm taking you through is from the FT. And interesting, Charlene, I'll come back to that point there in a moment. So US stocks climb after inflation eases. So I'm going to take you through the analysis of this, and this, by the way, was written in London. Now, I think that's important. So we're looking at an international lens here. So I'm going to take you through the results of what has occurred here, and I'm just going to talk you through the impact on each of the different elements that it's going to talk about, and then we look at how that is following through then, broadly speaking, into the market and around the world. Okay, so first of all, we can see there, this is really where I want to go, is data on Wednesday showed headline annual inflation slowing from 6% in February to 5% in March, with economists polled by Bloomberg expecting a reading of 5.1%. So, inflation is falling. Prices are still rising. Inflation is rising slower, slightly, than economists anticipated. That is another way of paraphrasing what you've just read there. Now, but core inflation is often the one that they watch. Now, I have a different view to this, right? The reason that people look at core inflation is, as you can see, it strips out food and energy prices. And the reason that it strips those out is because it is more focused on the more volatile sectors. Food and energy can change a lot, and there's a lot of volatility within their prices because there's a lot of inputs into their prices that can also change. Right, agreed. However, the issue is that this food and energy have been driving inflation to a large degree, whether it's the UK or the US or Europe, specifically Europe though, over the past while. So stripping out what seems to be the key drivers of inflation and the ones that people are really feeling in their pocket in the household, this is where the conversation can sometimes feel a little disjointed. Is core inflation is at the moment not necessarily what people are feeling. It is broadly, it's headline inflation is what people are really, that's what they're noticing in their bills. Now, that said anyway, core inflation preferred by the Fed, because it strips out volatile food and energy prices, rose from 5.5% in February to 5.6% in March, in line with economists' expectations. Now, so what happened? Well, first of all, US government debt rallied following the inflation data. So the yields on treasuries were down 0.1 percentage points. That means the prices rose. And also the 10-year yields fell to 3.38%. Here we go. Who mentioned earlier about the dollar? A measure of the dollar strength against a basket of 6 major currencies declined 0.6%. So what exactly is the conversation? What is the market taking out of this? Why is the market rising today as a result? Well, the message from today is that the Fed is winning its fight against inflation. Now, this was tipped. As you can see, what has actually happened is quite similar to what was anticipated. It's just not moving as quickly, which from a market point of view, no. From a Fed point of view is a good thing. If they can slow inflation, well then that means that it doesn't affect people as much in their pocket. You probably then would have a slowdown in wage expectations and a whole host of other things along the way. In particular, remember, the Fed has 2 jobs: maintain inflation around 2% and also seek full employment. Now, full employment, pretty much there. Jobs data last Friday, as you're all probably familiar with, was pretty good, right? That we're still dealing with a pretty tight labour market. So the closer it can get to its target, the more it's doing its job, and its job is there to have a knock-on effect on everybody. So it says the case for policymakers to pause is strengthening, although I still think they may be tempted by one more hike. Just remember as well, we are still dealing with an inverted bond yield curve. Now, lots of people talk about that. Let me just explain that a little bit briefly. What that means is that if you have a higher cost of borrowing in 2 years in comparison to 10 years' time, that's what the inverted yield curve looks like. That means that investors, bond investors this time, are pricing in there is more of a risk to my money in the next 2 years rather than the next 10. That is pricing in a risk of recession. Because, and unfortunately, I know this bit all too well. I remember back in 2009 in Ireland, we had an inverted yield curve. And that was where it was actually riskier to lend to the Irish government for 2-year money or 1-year money or 6-month money than it was in 10 years. And that was because the market was, if you want to call it predicting, the writing was on the wall then anyway, but the market was anticipating, that's a better word, that there would be a recession in Ireland in the upcoming period, and it was likely to have eased off in the longer term. We are now in the longer term. In fact, we're past that 10-year period, and indeed that was right. So that is where it was factoring in the risk of recession. Risk of recession, of course, would be more prevalent in the US now, again. It did change there for a little while, but certainly it is the case again. So what does that mean? Well, as the Fed, how do you handle recession? Then you lower interest rates. And that's what we're looking at here, is that we're seeing this inversion is calming down a little bit, because the risk of recession is indeed still there. But of course, then what does that mean for interest rates? Well, if they're going to drop interest rates, then of course, then that will help certain people, particularly those who are repaying mortgages, etc. Now, though, the Fed is facing a challenge. Is there enough of a risk of a recession where we stop the fight towards inflation? Or is the risk of inflation continuing to be very strong? And if so, we have to continue to fight it. Now, I brought this up in my Savvy Investors show. I brought this up with Glenn on the mid-afternoon update a couple of weeks ago. That is, in the US, we have not seen an increase in the pace of rate hikes like we have seen since the early 80s, not in 40 years. We do not know, you and me, we do not know yet the impact of those rate hikes so far on the US economy into the more medium term. So therefore, is the Fed already winning the fight against inflation? The moment, you could say, potentially. But the impact of the rate hikes that it has had so far, we don't know yet. And as a result, if they were to continue that pace and then just drive the economy into recession, then of course they'd have to reverse. And if they were to reverse, how long would that take to kick in? And how long would that lag be? So what the markets are pricing in at the moment is potentially another 25 basis point hike, and then that's it. That is what is priced in. The Fed, and remember the FOMC minutes have been released today, the Fed is not factoring in any cuts up until the end of 2024. Yeah, we'll see about that. So we can see here the bulk of the strength in inflation is in the most backward looking parts of the inflation basket. This primarily is a shelter story and a core services ex-shelter story. We know that both of those are looking to turn lower in the lower months. And at this stage, which I think the swap market, looking towards different markets is always interesting when you're focused on the stock market, because you can just give signposts. So the swap market is now pricing a 67% chance of a quarter point rate rise in May, down from a 75% chance before the latest inflation figures. So the minutes, as you can see, released on Wednesday afternoon, showed the policymakers expect stress at several regional banks last month to lead to tighter credit conditions for households and businesses and to weigh on economic activity, hiring and inflation. I'm not sure whether that is going to stand up to the test of time. Broadly speaking, the commentary now is that the banking crisis is over to a large degree. The Silicon Valley and First Republic and all that story is that was a 3-week banking crisis. Okay, well, let's move along here now and see where we're going after this. Is that, will the effect of that, will the tighter lending conditions, will they actually have an impact as a result of such a short, sharp, but fast shock is the question. And then, yeah, it goes on then to explain about about what's happened in the market since then. Okay, so now I'm just going to go back to you again here. So what's your take? What do you think? Where do you think inflation is going to go? How are you feeling about inflation? Are you seeing more inflation than what's being reported here? Do you see the impact of interest rates? Do you think, is the banking crisis actually over? Or have we kind of closed the door on that a little bit too quickly? I'd be interested in your thoughts on that. Before I give you any more of my own, I'm just going to pop on over here again to the comments here. So Charlene says, want to start selling puts, but undecided just yet. Okay, Charlene, here's what I would say. Selling puts, first of all, you need to either be investing in stocks that you feel are going to rise, or at least are not going to fall. Okay, so just bear that in mind. And that again, going back to the link that's in the chat already, that's what I focused on with the Savvy Investors show. And I analysed the results of Carnival, and I was picking up on the fact that it's a stock that had a very interesting earnings report, and it is a stock that may potentially be an interesting opportunity in the future. I didn't know whether I was bullish or not on it, but I did feel that the volatility that was being on offer, as we could see through the premium, was an opportunity for me to find very interesting. And I walked through the process of how I analysed that. So what I would say about selling puts is that if you're not bullish, then at least you need to see that you feel that a stock may not fall. But what you do need to factor in then is the volatility worth that risk. That's where I would be making that decision. Duane says, completely out right now, too much turmoil. And you said TD Ameritrade is charging my 401k to Schwab Bank and I'm considering changing to VectorVest. Okay, well, that's good to hear, Duane, of course. Can I just ask again, Joey, could I just ask you to pop the link into the chat for the trial? So, Duane, if you want to take a trial of VectorVest for 30 days, at least then you can click on that link and it will bring you right there. Okay, Lifestyle Coach says, feeling optimistic. I've invested 10 to 15% with a tight stop loss. Interesting. Now, before I move on to the stock that I wanted to analyse, because its earnings call was yesterday and I watched it live. Before I do that, I just want to pick up on a couple of other points. One of them is there with you, Lifestyle Choice. And that is, if any of you are wondering, you know, where do I go with a stop loss? I do just want to make the point for any of you who may be familiar with VectorVest is, let's take Carnival, right? That was the one that I analysed last month. Here we go with Carnival, and as I could take any stock here at all, but Carnival right now is not feeling happy today. It's still higher than the price that I was analysing it at a couple of months ago, or a couple of weeks ago now, and where that volatility is just hacking into the premium of the put option, Charlene, and that's why I'm bringing it up. But the point I wanted to make here is that let me take Carnival. The stock currently is 972, but I just want to pick up there is that every single stock in the VectorVest database has a stop loss. In this case, it's actually very close to it. It is 970. So in each case, there is, for every single stock and any single stock that you might possibly want to analyze in here, there is a stop loss put forward. That stop loss, by the way, is a 13-week, quarter of a year, 13-week moving average adjusted for risk. The better the fundamentals, then the wider the stop. The less better the fundamentals, the tighter the stop. Okay. Kim says, I don't think the banking crisis is over. However, the can may have been kicked down the road a bit in terms of a larger crisis. Interesting, Kim. Yep, good point. I wonder, though, how that will be manifesting itself. Sometimes kicking the can down the road in an inflationary environment means that inflation can help debt, for example. That certainly was the way people so often said that about the Irish debt and the broader European debt crisis. Oh my God, I heard that so often. But actually kicking the can down the road led to an environment where economic growth could, of course, pick up, and obviously our debt was renegotiated by virtue of an IMF bailout, but it just allowed time for that debt to be repaid. So obviously there was more time that had elapsed along the way. But in an inflationary environment, of course, then debt is a beautiful thing, because your debt repayments, assuming that they're fixed and that they're not tied in line with inflation, if inflation is happening and you're receiving that inflation, so let's say I'm a business, I'm taking in 100 million and I'm spending 60 million, and then there's inflation of 10%. Last year's profit would have been 40 million. Next year's profit would be 44 million. And if that is the case and my debt repayment is still the same, then I'm 4 million up. Okay. Now, yes. So when it comes to kicking the can down the road, sometimes that's what needs to happen to create the space involved. And of course, sometimes then, as we also saw with our banking recapitalization, simply hides a bigger problem. The question is, which one is it in this case? The markets are acting like it is the former, which is, okay, we've had a big sharp shock. The regulation and the conversations and the Capitol Hill discussions have been had. Let's now see where it goes from there. Okay, Francisco says, what screener do you use on the app when the market is down? Okay, let me explain that to you. First of all, our screener, if you want to call it that, is called Unisearch. And Unisearch will allow me to do anything when it comes to stock market parameters. So I could put in, for example, I can put in dividend yield greater than 2%. I can put in the stock has been trending higher for the past 10 weeks. I can put in that the earnings growth is greater than 10%. I can do all of that. But What I could also do is I could create a watch list of stocks, for example, and I could put that in as my screen as well. So it's not just broad market screens that I can put in. I can also really and truly tailor it around what I would like to do. I'll also say as well, Francisco, of course, and the link is already there. If you want to try this out yourself, you can do so for less than $1 for 30 days, and you can do this along with me. And of course, anyone who's watching this, when this isn't live, you can do the same. But to answer your actual question, the simple, quickest answer is short, is I can always look for short searches. So all of these over here, these are all shorts, and these would all be opportunities where you'd be looking for stocks that might be interesting shorts. And of course, they may be interesting. Charlene, back to you again. They could be interesting buying put opportunities as well, but just be careful around. Remember, volatility is a big driver of volatility or of option premium. So just be aware of that. The other one, now Francisco said bottom fishing. Okay, Francisco, can I kindly suggest an alternative thought process in that? Bottom fishing is a great search, but if the market is down and it's rising, and at the moment, I'm not convinced that we're in an environment where the MTI is up, yes, but the primary wave, or sorry, not the primary wave, the green lights in the colour guard aren't quite there enough yet. So what I would say is, you're totally right, in a down market that is looking up, bottom fishing can be a very good idea. Just if the market is down, like going down, then I would be holding off the bottom fishing for a little while. Okay, so Jay Major says CCL will be on a sell recommendation by the end of the day, question mark. Well, it is already there. It is already there. So the stock has now, the stop has now fallen to 969. Yeah, so the stock is currently falling. It's down 3.74%. So yeah, it is down already. Like I say though, you see what I did. And look, again, it was the previous episode, you can check it out there, is that I was factoring in selling a put option on a stock where I felt it wasn't necessarily going to fall past the level at which my effective buying price, if it was to be put to me. And also this sort of a thing where you can see like a price falling of 3.64% since 2 hours and 7 minutes. That's the type of volatility that you can be very, very well rewarded for when it comes to an option. Very well. So is the fact, what I would be more so looking at is I would be looking at the RT, and I would be looking at the change in the RT. So as you can see here, it's below 1. And all of this, by the way, all of this, JM, is so against what I'm usually used to doing. Like, I am more likely to find your buy recommendation, your high CI stock, your dividend yielding stock, your stock with a high RS, etc. Just in that particular episode, I had listened to the earnings call. I was familiar with Carnival from having looked at it and sold puts in it before, and just the premium on it as a result of the volatility and the rising RT, which itself was below 1. That was the thesis I was putting forward at the Okay, Francisco says I have the app only. Okay, what I would say there is, Francisco, like, check out the full desktop version for that, and you will be able to really get into the program then and really see what you've got. Lifestyle Coach says I'm looking at some hot stocks. 2 stocks have VST greater than 1.4. That probably, I better not finish my sentence without checking what I'm about to say. So hold on there, Lifestyle Coach. Yeah. Okay. What I was going to say there is I wouldn't have thought it was actually very hard or very difficult at the moment to find stocks over with a VST above 1.4. I wouldn't have thought that. And as you can see, we have First Citizen, we have Tingo Group, we've Vista Energy. This is the stock that I was telling you about in the last episode. I bought that in Europe. It's a lovely stock. Highest VST stock for ages, and it has been behaving itself. I see that it's down there a little bit today, but certainly that has been behaving itself well. Now, what I'm going to do is I'm now going to move into the earnings report of one particular stock at the moment. And I just want to show you the thesis that I was listening to and how all of these things are all weaving in together. But please do keep the comments coming. I'm only delighted to hear what you have to say and how you are saying them. That is really and truly what I'm here for, of course. Please do keep your questions coming. Please do keep your comments going, etc. Now, Can I ask you this? How do you know when a stock's earnings announcement is about to be made, or when an earnings statement is to be made? Do you listen to this on CNBC? Do you look at our earnings calendar, which I'm going to show you? Do you subscribe to a podcast? Do you follow specific stocks and you know when they are? Or do you follow this at all? So that's my question to you. Do you actually follow this at all? Do you, okay, Lifestyle Coach says Yahoo Finance, okay. Any others? Because if there isn't anywhere that you look and you'd be interested in this, the earning calendar con says, okay, great. Where I would suggest you go is, I'm just going to start off here with the homepage here in VectorVest. And again, let me know. I'd be interested to know where you get your earnings announcements, if you look for them at all. Jim says he loves my accent. That's what Jim, I said this at the start of the episode. I never, ever have a full episode without somebody saying that. But thank you very much for your comment. I always enjoy it when people say that. Because, I speak like this all the time. Not like to put it on. So I am going to go to viewers. And then down here at the bottom, I have earnings viewer. Sorry, event viewer. Con says I include in my stock choice. I include there. Okay. An interesting point. An interesting idea. And then over here we have dividend executions, we have dividend payouts, and we have earnings. Now, of course, Monday the 10th of April was Easter Monday. And then you can pick any series of dates that you want. But yesterday was Tuesday the 11th of April. Okay, lots of dividends going on there. And over here we had, I'm just going to increase this as much as I can for you. Albertsons Comp, Seaback Energy, Cognite Software, CarMax Group, PriceSmart, Perimeter Medical, Skillsoft 4, and UXIN. And Louis Luke says, I've had CCL stock on my watch list for a long time, and vacations time is here at the end of the year, 6 months away. Interesting, Louis Luke. That earnings call, they were pointing out how February, the end of February, was their busiest week of bookings ever in the company's history. So your vacation time here is at the end of the year, 6 months away. So it's just the places that people are going on vacation, the actual, not the places, the volume and the timing that they spend. And they were also mentioning as well, Louis Luke, that the European cruiser drinks more, but the American cruiser gambles more. And a very interesting understanding of the per diem, of the different type of customer, etc. So you're right. When you look at the differences in how people pursue their vacations is important, but also, of course, what really matters when it comes to looking at a stock like that is who are their customer and what are their respective trends. So the stock that I'm going to take you through today is Skillsoft, right? I am familiar with the education and technology business, so it's something that I wanted to take a look at. Now, first of all, today Skillsoft is getting, unless things have changed since I looked at the market, but so today, Skillsoft is down 8.66%. It's interesting how the market has reacted to their earnings report. The stock yesterday, it closed yesterday, $2.02. So now we're down here to 184. And, sorry, just before I go on. So Navta says, is there any way in VectorVest to find when specific stocks earnings will be announced? In other words, the reverse of what you're looking at. Oh, absolutely, Navtas, absolutely. Let me just go back and answer that question before I get into Skillsoft. If I go here to Events Viewer, and let me just scroll down then, like you tell me the date, and it's in here. So I just scroll down here. So that's Tuesday, Wednesday. Let me just here. So you see here Thursday, 13th of April. And then Friday is the big one. So Friday we have, like I was saying, to JP Morgan, we've Hermes as well. Love their perfume. I just love their perfume. We have United Health. It's another one that a lot of people are looking at. Naturally, Wells Fargo is in there. Citigroup is in there. So yeah, you can absolutely do that. Absolutely do that, Naftis. Just go right in. And I could keep on going and going and going. And that also is the case in VectorVest Europe, VectorVest Canada, etc. Martin says, I only follow VectorVest and no need to go anywhere else. Well, that's lovely to hear, Martin. Thank you very much. And I, as you can see, start off with VectorVest. And I'm always looking to see, well, what is the analysis there? And it's then I will weave in different elements of what I hear, whether it's the inflation data that's out there at the moment, or listening to an earnings call to just compare and contrast in between different sectors and different things like that. So delighted to hear that. Navta says, starting from the stock, not the day. Right, so if I go to the graph, let me go to the graph there now, for example, and let me put in Skillsoft AIL. Just put this in. And I'm going to put this in here for the past 3 months. And there we go. There we go. I can put in the earnings here. So here's the earnings date. So it can also come from that point of view. I can do so on the graph as well, if that's specifically what you mean, Navtas. And if not, now, of course, yeah, start from the stock, not the date. Yeah, so I can do so here from the stock here. So I can go into a stock and I can see when the earnings are going to be announced on a graph. If I'm not answering your question, and if we run out of time, of course, Navtas, please do send in an email to support@vectorvest.com, and they'll be absolutely more than happy to take care of you. Now, I do not want to exit at all. Okay, so let me just walk you through Skillsoft. Is it a good idea to invest when earnings are coming up? Well, Francisco, it depends on what is in the earnings, and that is, of course, you're very welcome indeed, Naftas. You're very, very welcome. Is it a good idea to invest when earnings are coming up? It can be a time of volatility. It's often a great time to a very common investing or options approach can be to buy both a put and a call, because if the volatility significantly changes in that short period of time due to the time value, well then, one, if we have any type of explosive earnings, like what you see now, the stock price falling today by 8%, Skillsoft, for example, you'll see the volatility of that increasing dramatically. The put value on that stock would increase dramatically, and your call value would probably go way down. But if you put the two together, then there may be a possibility that if the earnings has changed the stock price enough, then you could benefit from that point of view. That is where it's totally focusing on the volatility or the vega. In terms of it being a good idea to invest in a stock generally, it's too hard to call because you don't know what the stock results are going to be. Like, I'm about to take you through Skillsoft here, and I'll show you what has happened in their earnings results, and you'll see that, broadly speaking, what they said was positive, but I know there's a couple of numbers in there that the market is just not happy about, and therefore, as a result, then it hasn't been a good time to invest, or let's say in advance. So it's just too hard to call. Lululemon was a stock that I showed people a little while ago, and Lululemon, I think, was up 13% on the day that its earnings were out. So I can't answer that as a general rule. The only general rule I can give you is that if it comes from a volatility point of view, that's different. So let me head on over here now to the Skillsoft. Close that. I'm going to show you here. So Skillsoft. This is a couple of things that I want to point out to you, right? So first of all, over here, the bookings, right? The term bookings when it comes to Skillsoft is the number of, or the percentage of, sorry, it's not percentage. It is the money that they collect as a result of people either paying for training, ILT training they call it, and the ILT training would be instructor-led training, or else subscriptions to their content, either. Now, Sue says, I have set up a search in Unisearch to scan for stocks, earning dates, X days out. That's a very good idea, Sue. That is a very, very good idea. Now, the reason I haven't done that is because I basically can go into the events calendar and I can go, I can look for them, but you have it. You can make them appear in a different sort of a list there. So that's a great idea. Now, what I think is interesting here is that the one thing that came up again and again and again in this earnings call is that, according to themselves, according to the earnings call, Skillsoft is the most profitable in their industry. All right, that came up, I don't know how many times, most profitable. Okay. That is not in the press release, but it certainly is in the earnings transcript. But what I do want to talk to you about then is, well, what is profitable though? Because their earnings per share was in a minus. And I'm just going to bring you here to this one. Adjusted EBITDA from continuing operations is $107 million. And this reflects a margin of 19% of GAAP revenue. GAAP being generally accepted accounting principles, right? So that's simply a methodology of looking at accounting. So it is generating EBITDA. Now EBITDA, again, another algorithm, is earnings before interest, tax, depreciation and amortization. Skillsoft had a massive amortization of its goodwill, and that is what has swung the stock into an earnings per share loss. So if I was to look solely at the EPS, which I can do it here for you, if I just look solely over here, look at the graph. Let me just, I have it on here, and let me look at the EPS. There we go. The EPS has been, you can see it here. The EPS has been declining. So here we are, back on the 12th of January 2023. The EPS has been declining, and particularly that is, as I say, as a result of that, the goodwill. And that respectively is also as a result of they went and acquiring a range of companies. One of them was a coaching company. And that coaching, their revenue from coaching has doubled in the past year. So obviously when it comes to buying a company, well, you need to obviously factor in what price you pay for it, because if it was a very high price, if it was trading at a premium, very significant premium, well then you have to factor that into your earnings per share, because the earnings per share is the last figure down the very bottom of the profit and loss. But what I'm interested in is then what? And what's going to happen next? So the company is not planning to acquire anymore. And the other thing that I think is interesting here is, before I go on, I just want to point out here is that adjusted EBITDA of 102 million, reflecting a margin of 18% pro forma revenue. So give or take, we're looking at around about a 20% EBITDA profitability margin. If the company can swing into a profit, then I think that will become a lot more relevant. The other one I want to point out to you as well is around its, not profitability, but it's cash flow. Cash flow. Okay. So with a strong balance sheet, a healthy liquidity profile, it has 170 million in cash. That's what that refers to. We expect to continue to invest organically in further differentiating our immersive AI-powered learning platform and our best-in-class content library, while also driving meaningful free cash flow generation within the year. Con is just asking me, where is the info you have on your screen? It is the press release from the earnings call. Thanks, Con. Fred says he needs to drop. Thanks, Susan. You're very welcome, Fred. Thank you very much for being here with us. So I just think it's just interesting that it is heading for free cash flow positivity in the year. Carnival said the same in their earnings release, but also they are at the moment in non-investment grade debt. So we need to bear that in mind. There's a difference here in between the two. The other thing that I think is just interesting from this point of view as well is this point. A second, yes, repurchase. They are repurchasing 5 million of their own shares. So they have repurchased 1.6 million through to the 31st of January 2023 under the company's $30 million share repurchase program. And that is going to continue as well. And like I say here, the end of the year with 170 million cash and cash equivalents with net leverage of 4.5x of pro forma adjusted EBITDA. Now, their revenue, the fiscal 2023 revenue is 555 million. So the revenue declined 1% year over year, with Skillsoft content segment revenue growth of 5% growth year over year. Now, if you really get into in behind this company, it is focusing an awful lot more on its not actual content. It's all actual content. It's focusing more on the subscription-based content as distinct to instructor-led, and that had a significant decline. The instructor-led content, they're focusing more on the e-learning side of things. But what I think is particularly interesting as well, and I only have a little bit of time here, so I just want to briefly take you through a couple of points that I felt were interesting. So they have 25,000 learning assessments, and when it comes to the areas that they're particularly focusing in on, there is a lot there on DEI. DEI is diversity, equity and inclusion. And that's why I now want to talk to you about the ESG side of things. I'll pop back to the earnings report in a little while, but I'm just going to focus on this here for a moment. This was their first ever ESG report, and apologies, I don't remember the person's name who questioned about if we can trust the process. Independent of trusting the process of ESG analysis, I think we can all agree, and feel free to disagree with me if you want, but I think we can all agree that sustainability is growing massively in terms of job production, in terms of interest, in terms of the willingness of companies to engage at that level, in terms of particularly in the EU and the taxonomy created and the sustainable development goals from the UN and green energy and electric vehicles, etc. Where I am interested in, from an ESG point of view, is indeed how a stock is evaluated and analysed and performing on an ESG level. But I think it's also worthwhile considering who is selling in to that sustainability market. And that's what I was looking for here. And Skillsoft is one of them. DEI. Okay. DEI. Curious. Pick another word. Diversity. Okay, of course that's not there. Let me just go way down here then, down to the bottom. So it sells to 72% of the Fortune 500, 82 million learners worldwide. Now that's actually up to 85 million based on what I had heard last night. 154 countries and 31 languages, and it is very much focusing itself on the DEI. So Skillsoft commits to developing specified sustainability goals. We commit to developing relevant, up-to-date content that emphasises ESG, diversity, equity and inclusion topics and helps our customers and employees develop their skills and make an impact in these areas. And as I read down through the sustainability report, I did think it was very interesting to see the growth of this particular area, because I know now I would just be able to pull this right up there for you. Yeah, it was just about stations. I don't seem to be able to find it right now for you. But anyway, my point is that it certainly came up again and again in the earnings call, and it is really interesting just to see that they are at the forefront of selling into this area. So if they're selling into this area, the most profitable in their industry, growing their revenue with the content revenue is growing 5%. Their revenue declined by 1%. Their earnings, their EBITDA earnings is at a profit margin of 20%. They have 170 million of cash, and they're stopping to acquire. They also have taken on they've taken on some new salespeople, and they're now going to be accelerating the sales of that of their product as time has gone on. They're increasing their learning badges, and also they're using generative AI across their content. And one other point that I'm going to mention in here is their pricing. They said that the segment that they find is understanding or is experiencing a lot of pricing pressure is the one that is check the box learning, whereas the strategic reskilling and upskilling is growing much faster. In an environment where you've got a tight labour market and where there is a focus on reskilling and upskilling, I felt this was interesting. Now, all that said, that's from a business point of view. And to be honest, a profitability point of view and looking at the lens of the accounts. But what we need to do, and what I'm going to do in the last 2 minutes that I have of the show, is that I now want to take you through what the stock market is saying about it, because the stock market isn't happy. So if I was to pull up here, if I go into the viewer, first of all, I go into stock viewer, and Louis Luke says, Sue Thomas, to use every tool available to improve our investment helps a lot. I agree with you indeed. Is that here is the way in which we would look at this from a stock VectorVest point of view. First of all, I'm going to put in here Skillsoft Core in here, right? So as you can see, the stock price has slightly turned since I started talking about it. It's now back up to 186. I think it was at 184 a little bit a while ago when I was looking at it. Now, what we're seeing here is very low relative safety. And of course, do we have consistency and predictability of financial performance? No, we don't. Because the company is in an earnings per share loss. EBITDA not, but the other it is. It's currently valuing it at 197, so it is slightly undervalued. Slightly. The RV, the long-term price appreciation potential, is under 1. but the RT is at 1.05. So the stock is, now that is very recent, because when we look at this a moment ago now, it wouldn't have been at that case. VST is at 0.85, so it's below 1, and the stock has a hold. And the reason that the stock has a hold is because the price at 186 is 10 cents above the stop of 176. The growth rate of the earnings is minus 10%. And also then when we look at the earnings per share, it is indeed at 102, which is the EPS that was announced, but close enough to it. And then also over here, we can see a range of other things there. We can see a very significant volume on the shares traded. If I'm right, I think the volume on the shares was up about 123%. If I'm correct, I'll just right click here briefly and check for you. Pretty sure the volume was way up. Oh, okay. The volume so far is minus 8.87% today. Yeah, we'll see how that goes with that type of volatility. We'll see how that goes. Yesterday's, let me just get yesterday's for you. Yesterday's, I'm pretty sure it was up down here. Yeah, it was 121% based on yesterday. So this is the issue, is that when we would look at a stock like this, of course, what we would actually do then is remember they did say they were the most profitable in the industry. So what's a good idea? Double click and then let's see what's actually in their industry. Because when it comes to a stock like this, we do have to compare against others, and we can see that there's a range of other stocks that are in here. And a lot of them are performing much better today. So we can see Aspen Tech is up 3% today, for example. Salesforce is up 1.19% today. Intap is up 2.89% today. So when it comes to analysing a stock, we have to not just look at what the stock is doing, what the earnings is saying, etc., but also look to see, is there a better alternative for what we're looking at? The reason I chose Skillsoft to talk to you about today is because the earnings was out yesterday. I wanted to take you through a live annual report, and I also wanted to tell you, number one, the reality is that inflation is still there, it's still strong, but it's slowing slightly. It'll be interesting to see how that is going to go on and affect the markets at the moment. Are pricing in 2/3 of a chance of a quarter point raise. The markets are certainly factoring in after that would be the last one. We'll see. We are also looking at quite a tight jobs market. We saw that particularly last week with the jobs report. We see that there is a trend of diversity and inclusion and sustainability sort of education. We're also seeing that there is a growth of micro learning and to be able to consume content from that point of view. And there's also new badges, and that is something that Skillsoft is at the forefront of. But one does need to not just look at the business, but to look at the investment thesis. And more I'm looking at the sustainability reports because there's another angle there from the ESG point of view, but also how they're selling into that environment and how they're acting in that environment. As I summarize here for you today, I don't see Skillsoft up here in the top 10 stocks of the list of companies that I'm looking at. If I was to take a very simple approach here, VST is telling us that Aspen Tech at 1.39 is the best combination of value, safety and timing. We have got a stop loss $33 below it. And also all of these stocks here have pretty fast growing earnings except Kingsoft Cloud. All of the others have double digit fast growing earnings. So therefore, would these be better opportunities from an investing point of view? It certainly would be interesting to delve more deeply into these. Now, I do think, of course, it is also interesting to look at the fact that not all of them have positive earnings. We can see that because not all of them have positive PE ratios. So that is something to be considerate of as well, is that if you're looking at a company that is on a fast growing, fast paced, possibly investing acquisition growth process, well then from that point of view, it can be in a situation of where the earnings per share can be negative. The question is whether you want to take the long-term approach or the short-term approach. If it's the short-term approach, look at your market timing, look at your green light buyer, look at stocks that can certainly have that value, safety and timing, look at your growth, and look at all of the other things that you would look at from a short-term point of view. If you're going to go long-term, just decide how long that term is going to be and rather than take a position now and say, well, you know, it could go up at some stage in the future, make a decision and say, well, can you hold off? Then perhaps should you just hold off until that time is closer and reevaluate accordingly. But to bring it all back together, in essence, today I had wanted to talk to you about, first of all, where the markets are at. The US market is certainly taking that news pretty well from what has been released this morning around inflation, but there's a lot of uncertainty out there. There is a big question around that fear of recession and so on. There's less of a question now around the interest rate hike, a question nonetheless, but just less of it. And it's a very different scenario in Europe. We've got some green lights, we've got a confirmed call, and there's a very different scenario there. From the point of view of the inflation data that came out, it does look like that inflation is certainly still there. It is slowing, but will that be enough to actually create a pause? And the other big question is the banking crisis actually over? If it is over, and if it doesn't actually have a big effect on the lending, in fact, the lending capabilities of the banks, well then that means that potentially the central bank will have to do more work. I asked the question when I was a guest on Glenn's show. Joy drives the bus in the background. That's why I'm confusing those. I did ask the question, who is actually managing that sense of monetary policy as a result of the money being released into the market in the US? Is it the central bank or is it the banks if they slow down the lending? The question is whether there will be who, as a result of what has happened and as a result of the fact that it seems to be over, the market is pricing it in to be over, well then there could be less of an impact on that, and then the work will go back more so on the Fed. Also, I want to show you how to find the earnings calendar on VectorVest, and then to also get in and to look at it. The differences that I see between the Skillsat earnings report and what we're seeing in the market reaction is, number one, is I was looking at EBITDA as opposed to earnings per share. I was also looking at the what's going to happen later on when I look towards the longer term with Skillsoft, and the fact that those goodwill, amortizing the goodwill, etc., seems to be a one-off. So it'll be interesting to see where they go. Looking at the sustainability report, not just from an ESG perspective, but from a business opportunity perspective, and also looking at their liquidity position and their profitability position. But fundamentally, when it comes to deciding on where one might look for a stock opportunity, it is important to do an industry level analysis. And I was able to find stocks with buy recommendations that were much further away from their stop losses, that also had higher RSs or Vs and VSTs as well. So it just depends where and which way that you want to approach the market and take it from there. So Louis Luke says, yes and no, sometimes it's good to stay out of a stock on an earnings date. And that's the thing, is that it's harder. It's hard to call a hard and fast rule when it comes to that. Lifestyle Coach says, this is so valuable. Thank you, Susan. VectorVest has kept me in check, steady portfolio with no big losses, 3 weeks it's joining. Wow, that's really lovely to see, and thank you. And yes, indeed, Joy says it's my show, lol. There is no lol, Joy. There is no lol. So on that note, I'm going to thank you all so much indeed for being here. The next episode that you're going to see with me is going to be Savvy Investors at VectorVest, and that is where I have an interview with Glenn, like I've never seen him before, and I'm going to get into those conversations with him around what he really thinks, what he really does, and what he has learned about VectorVest that has proven to stand the test of time over the years. Of course, I'm going to be interviewing him, but on behalf of you, so please do make sure and subscribe to the channel, put on the notifications so that you know when not just me, but any of us are going live here at VectorVest live on YouTube. We're only delighted to have you here, and we're very, very, very happy when you are interacting with us, and you've been a superb audience today. If you're not watching this live, if you are watching this afterwards, then please do feel free to comment. We love hearing from you there as well, and we will come back to you. As I say, we're building our community bigger and bigger all the time. So on that note, thank you all for joining us. Please do like the show so that others can find it. Please do join, of course, the mailing list as well, vectorvest.com/FFF, if you would like to be notified of the follow-up email that's sent out after my own shows. Otherwise, have a super week. Every best wishes you invest and as you trade. And see you again soon. Bye.